Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis, episode 6 for week ending November 14, 2020. On Monday, markets rallied but big tech sold off along with Tesla. Tesla closed at 421.26, down 2%. Tesla attempted to break out of that consolidation zone above 450 at its intraday highs, but then sold off for the rest of the day. It's been trading between the blue and green channels the past 5 trading days, and it's been consolidating between 405 and 450 since September. Now, the longer it consolidates, the bigger the move will be when it breaks out or breaks down. On Tuesday, Tesla closed at 410.36, down 2.6%. It tested the bottom of the consolidation zone successfully at 405. As you can see, at its intraday lows, it broke below that 405 level and into that blue channel, which is showing signs of weakness. The RSI is also touching the lower end of the consolidation zone at 46. If it breaks below 46, Tesla will most likely trade below 405. On Wednesday, Tesla was up 1.7%, closing at 417.13. Tesla continues to trade between the blue and green channels, where it currently lies on the consolidation zone at 405 and 450. The presumption is that it will continue to trade within this range. On Thursday, Tesla showed some weakness and closed down 1.3%, closing at 411.76. It continues to hover along the lows of the consolidation level at 405. The longer it hovers along these lows, the more likely it'll break to the downside, especially given the RSI, which is about to break below 46, as well as the MACD, which has a negative slope. For the bulls, there's still hope, as Tesla made a higher low from its lows on October 30 to November 10. On Friday, Tesla was down 0.8%, closing at 408.50. Once again, it's testing support at 405. Another thing to take note is that it's trading within a wedge between the 50-day moving average and the blue channel. The RSI is touching the bottom of the consolidation zone at 46. Tesla bulls really need to take a stand here, otherwise that 405 support level will break. If that 405 support level breaks, I can see Tesla moving down to 385, which is the bottom of that blue channel. Now, if things get really bearish, the next level of support is 360, which is the lows of several trading days back in September. It is also the point of resistance going back in July. And if you look at the monthly chart, 360 is the bottom of the green channel shown here. And in my opinion, is a very strong support level. Now, my bull case price target for Tesla next week is 418, which is the 50-day moving average. It must break out of that wedge before it can head up to 450 and retest that resistance level. If it can break out above 450, it can make its way back up into the green channel, which is 460 and above. So those are my price targets for next week. Bull case, it must break out of that wedge above 418, then head up to 450, then possibly 460 and above. Bear case, if it breaks down from the wedge at 405, it'll head to 385, and if it breaks that level, 360. Now, onto Tesla news. Tesla may face delays at Gigafactory Berlin over lack of permits. Tesla started off on shaky ground in Germany as they went ahead with construction of Gigafactory Berlin without obtaining final approval for the project. They were able to move forward with construction through individual permits. According to new reports, Tesla is currently unable to continue building as planned due to the lack of permits for further clearing of the forest and the paint shop. Last week, Musk went to Gigafactory Berlin to boost hiring efforts and personally interview candidates. He also met with the Minister of Economic Affairs to discuss the situation with the permits and schedule. The completion of Gigafactory Berlin is extremely important for Tesla. It will enable them to launch Model Y in Europe after it has already been in production in the US for over a year. Despite this permits issue, it was reported that people familiar with the project still aim for the start of production in July 2021. The problems in Germany don't stop there. Just last week, it was reported that Tesla is fighting a $14 million fine over its battery end-of-life policy. German regulators are claiming that Tesla is failing to comply to its battery recycling policies. Tesla disagrees and is fighting the fine, stating that they believe the issue is only administrative. It seems as though Tesla has a history of ongoing issues that arises out of its business in Germany. For example, remember when the German government tried to keep Tesla out of its electric vehicle incentives? Or how about when they went after Tesla over its advertising of autopilot and full self-driving package? In my opinion, given the evidence, it's safe to speculate that the German government is trying to stifle Tesla's growth, development, and just get in the way of them conducting business, especially since Tesla is a threat to the German automotive companies. Tesla ranks number 1 as the most attractive company for engineering students to work for in the US. In a fast-paced tech world, innovation is the key for companies to stay competitive. What better way to achieve a high pace of innovation through establishing a culture that nurtures it within the company and attracts top engineering talent? Not only is Tesla ranked number 1, but it is also the only automaker in the top 10.